Hey, good afternoon, everybody. It's 12:33 on Thursday, November 30th, and just coming on live to do kind of a quick lesson on gaps. This is Sami Abusaad from the Black Room with T3 Live. Today, kind of an interesting gaps list, and this is primarily what I try and do is, or what I focus on as a day trader are the gapping stocks because gaps create momentum. They move a lot. They create movement. As a day trader, we thrive on movement because without the movement or the volatility, you're not going to be able to really make much at all. So I look for gaps. I scan for gaps every day in the pre-market and sometimes the night before, and I look for what we call significant gaps, right? Significant doesn't mean like the size is huge. It just means it is creating something significant on the chart, right? So it's a visual thing that I look for. Most of the time, though, the gaps that I end up playing are significant in terms of size, meaning something that's gapping 1, even 2%, most of the time will not make it to my gaps list. But really, it mostly depends on the chart pattern. So if we look at just a few of the gaps from today's gaps list, and I'll show you what we can learn about gaps just from looking at a few of the gappers from today's list. Before I actually go over it, let me just say one thing here, and that is there are primarily two types of gaps. There's more than just two, but primarily there are two types of gaps, professional and novice. Professional means it's gapping against the expectation of traders that were or are in the stock. And how can you tell what the expectation is? Just look at the last bar or two on the chart, the daily chart. And that should tell you whether this stock was being bought, and so the expectation was for a gap up, not a gap down, or sold. So does that make sense? So if the stock is up a lot, like SMTC, down a lot, right? And then it gapped down. That's novice because the expectation was already the gap down is already built in. A lot of traders have already exited, so the next day when it gaps down, that's just novice selling or panicking. So there's no more selling because the sellers are already out. Whereas something like, let's just say the BKS, two big green bars, and then the next day today gaps down. That's a surprise gap. Almost everybody that bought it yesterday and the day before and stayed in it, and I know that most people did stay in it because we don't see a big red bar, meaning they didn't exit. Today they're underwater. So if the stock, so if you get a nice pattern, that should cause the stock to drop. This stock in particular had a conference call at 10 o'clock, I think, and it just lacks the momentum. It actually does look lower, BKS. It's on the pilot program, lacks the momentum, had a conference call, so it's not really cooperating. But that's a professional gap, right? Two green bars and a gap down. That's a surprise. Professional means surprise. It's going against the expectation of the majority. So this is lower, should be lower. I mentioned it in the room as a short under at 690. So if you look at the 5-minute chart, right here at 690, stop either over 705, but my mention in the room was over 715, the stop. So safer. That's the breakout failure. So you just put the stop above it, and short under the this pivot, 690. It's part of the pilot program, has 5-cent spread, and it lacks the momentum, so I honestly didn't even try to take it. Okay, but BKS. NCLH wasn't such a good gap because it gapped to support, but any time we don't have a big red bar and we get a gap down, that should be considered also a professional gap. So this was a pretty nice drop this morning. Actually, I mentioned it under 62. It should have been under 70, I think 72, a short, but I didn't see it at 72. This didn't make it to the gaps list this morning. but Ifan from the Black Room, also who's a moderator with me, uh, found it. So it should have been under 72, but that's where I saw it, is on that base as a short. Worked beautifully. And check this out. It also went climactic. It wasn't such a good climactic long, but look at this spike in volume, right? That indicates the stock, it had a little bit of capitulation. And so long, and it really worked too, right? Both ideas were mentioned. I only did one thing today, and I'll talk about it later. XNet, huge red bar yesterday. So today, gap down. What is that? Is that a novice or a professional gap? Based on what we discussed so far, novice, because everybody that wants to be out is already out, right? So when it gapped down this morning, that's panic selling, right? The sellers are already, the majority of them are already out. I'm not saying that there are no more stock. The ones that are holding are probably not looking to exit now. I'm talking about the traders, the ones that are actively trading it. The ones that want it to be out are already out. So today when it gapped down, that was a novice gap. So meaning play long, not short, right? Buy it, not sell it with the right pattern. So I look for the gaps to give me a bias, and then the intraday charts, the multiple time frames, for a pattern. So the XNet was also mentioned long, but it didn't have a great chart pattern. The TD, this was also found later on. I didn't find it pre-market, but look at it. Yesterday was a green bar on the daily chart, right? What does that tell you? The expectation was higher or lower? Higher. People were thinking most likely it reported earnings, but I don't know for sure. I don't care about the news. There are very, very few instances when the news actually matters, such as when the stock is a buyout, like I think Axta was a buyout yesterday. See this? When it's a buyout, it doesn't move. So you don't want to be trading it thinking it's going to move when it's a buyout. So there are just very few, 4 instances when the news matters. But most of the time, it doesn't really matter. So TD, that was a pretty good short, probably, right? I didn't have it at the open, but that's a nice sell-off. It's actually, I think, setting up short for the afternoon. Let me just take a look on the 15-minute chart. No, it's not. I mean, there's a sell setup under 57.28 by 41, but that's an uptrending sell setup. It's not a downtrending sell setup, so it wouldn't be good. Momo, nice 1, 2, 3. It was on the daily watch list for the nightly game plan program. Pretty nice 1, 2, 3. Now this wasn't a gap. The gap happened a few days ago, and you might think, well, isn't this a red bar and on the daily chart a few days ago? Wasn't this a red bar and then we gapped under it? So wasn't that a novice gap? Yes and no. It wasn't a novice gap because we gapped under support, right? It was a bit novice, even though again it really wasn't, because of the red bar. So it would have been far better if we didn't have the red bar, and let's just say we had a move up and then we gapped under support. Those are the best. But this was okay, short, couple days ago, and today was pretty okay too, as a 1, 2, 3. Here's an example of a novice gap, big red bar and then a gap down. When it comes to novice gaps, bigger is better. So this was pretty big. I mean, good size. Whereas something like, let's just say the GWRE or the WD, those were very small. You can say novice should be higher, but it's too small. And it was also damaging to the daily trend, breaking under the base, right? So it didn't go higher. It wasn't watched as a long. Only the SMTC was considered a long. But I'm just pointing out that when it comes to novice gaps, bigger is better, right? Let's take a look at some gap ups. Costco, was that a novice gap? Yes and no. It was novice because it gapped after a big green bar, but the size was very small, only 2%. And at the same time, Costco was actually, it provided a good short opportunity. I just couldn't get to it fast enough. I called it out verbally on the mic, but by the time I typed it into my platform, it had already dropped 30 cents. And I was stocking another stock, which I'll talk, KR actually, which I'll talk about in a minute. So that run up short under 153.50 by 183.50 by 184.45. So $1 stop, pretty nice drop. Now the market today is really bullish, is up 1%. So Costco got bought, but it provided a pretty good short opportunity earlier. KR, let me ask you this. What was the expectation for KR? Higher or lower? Higher. So today's gap should be novice or professional. Should be played as a long or a short? As a short, right? So that's what I stalked the KR for forever. This morning, it just wouldn't go. And then I finally gave up on it. And that was my favorite short idea this morning. I'll show you what the KR did, which is very, very typical. I mean, KR is one tough stock to trade. It's probably dominated by HFTs. I mean, just look at this. Stocking it short. The call was under 27, 26.97, I think. So if we look at this bar's low, oh no, not this bar's low. This bar's low, 26.97 short, but it just wouldn't go. And then eventually the moving average caught up. I don't like to short into a rising 20 period moving average. So I canceled the play. It actually eventually worked. I mean, came back in, never took out the high of the day, so it wouldn't have stopped out, and then worked, but I wasn't in it. I'll show you what I did though. So take a look. Bearish, the first bar came, the widest bar was at the beginning, which suggested lower prices, and then the smallest bar at the end, which suggested lower prices still. I noticed the sell setup. 1, 2, 3, right? And then there's a sell setup. Now this sell setup wasn't that good, but let me show you what the 2-minute looked, what the stock looked like on the 2-minute chart. Here it is. That same 5-minute sell setup. Look at the 2-minute. That's a sell setup with confirmation. What do I mean by confirmation? Green bar, and then if we break under it, should work. That sell setup on the 5 should work, and that's what I did. That's the only thing I did today. Under 58 by, I think it was a 30-cent stop. 58 by 85, almost 30 cents. So it's 26.58 by 26.85, 30 cents. I took 1,700 shares because I risked $500 per trade, and I captured 30 cents. It dropped, I think, 40. So 58, so almost 60 to 20, that's 40, almost 38 cents. I captured 30 cents or 29 cents, and it went back up. But that was a nice little short opportunity. You know, I don't make money every single day, but like yesterday I lost $640, I think. But I certainly come out ahead on most days, almost every day. And right now it's a very, very slow time. I mean, it's dead almost based on, now, if you do certain strategies, maybe it isn't. But based on my style of trading, there just isn't much to do. A couple of weeks ago with earnings season, I mean, I was on fire. Right now it's just a little slow. Okay, so the KR was novice, and the thing about the KR that was better than the Costco is the size, right? This was like a 10%, 13% gap. This was only a 2% gap, right? SNPS, I don't remember. SNPS was a great professional gap, and lo and behold, it's not working as a long. Why? Anyone know why? I'm doing this live, so I'm just giving you a minute to think, right? Because it's up so much. Look at this. The professionals have been buying it a lot all this time, and we can even zoom out more, right? So it's been up and up and up and up. So big money takes advantage of earnings announcements, which attract a lot of attention, and they dump their shares. It gives them a market to exit their position. So this was up so much on the daily chart, and today's gap was well above the resistance. We like stocks to gap just above the resistance, not so far above it. It was $5 too big, and then again in the direction of the long-term uptrend. So that gives institutional money the chance to exit their position, right? So that's probably what happened as to why the SNPS came in rather than got bought. Now, I did like it long. I didn't like it short. It would have worked as a short. I did like it long, but it just didn't work out. The other thing is the SNPS had 40 cents spread, 50 cents spread, so that wasn't something I was going to play. Shield, was that novice? Was that professional? It's in between, right? We had a couple of bars up and then a gap up. But yesterday's bar was not a big green bar, it was a topping tail. So technically speaking, professional. But here's the thing about the shield. It's also, you have to think about the people that are in the stock. Let's just say you're in the stock from here or from there. You bought it thinking it bottomed, any place on the way down. And then today you got a 28% gap in your favor. Wouldn't you just take the money and run? I would. I would just say, thank you, God. I am out of here. And I would just exit. So Shield often gets sold on gap ups. And I said that in the pre-market, in the black room, that this will probably be a short rather than a long, but I don't have it available. It's hard to borrow for me. Because there's a lot of people that bought it, you can see the green bars on the way down, that would want their money back today, or at least some of it. So if the shield was a 4 or 5% gap, then no, probably would have went higher, would have gone higher. But because it was such a big gap, it got sold, right? So that makes sense. TLYS, just an awesome gap. The only issue that's not good about it was the size, right? It was a little too big. It would have been better at 14. Would have been ideal at 14. But a nice gap, really bullish stock, right? Basing above the flat 200, pretty good. So professional. ENB, professional, but the same issue as Shield. It gapped up a huge amount and then look to the left, resistance. So it's not always about whether it's a professional or a novice gap. It's also about analyzing the chart, analyzing the trend, thinking about the people that are in the stock. How are they going to be? What are they going to be doing? If I was in it, what would I do? These are questions that I always ask myself. Now, the truth is, I don't ask these questions anymore because this is second nature to me. It's like a language. You don't think about it. Sometimes I think about certain words, or because English is not my first language, right? But I don't, for the most part, I don't think about what I'm gonna say because I know what I can communicate it. So the same way here, trading becomes second nature. So I don't have to ask myself questions. I just see what the chart is telling me. I see what the chart looks like, and I can immediately understand what's happening. This was pretty good, except for the resistance again, right? And the size of the gap. MIK, and I think the HCA were not that good as far as gap quality, but they have one thing in common. And does anyone know what it is? And this is a really good, great tip for you. When you have a stock, regardless of the quality of the gap, almost regardless of how good the gap is, professional, novice, when you have a stock that's gapping over flat 200, it almost always gets bought. Flat 200 and a gap just above it though. That can't be way above it. Just above it, it almost always gets bought, whether it's novice or professional. It almost doesn't matter. Just above it. In this case, it gapped a little bit above it to here and pulled back right to the 200, and the 200 acted as support and lifted the stock higher. You see that? So it's something that I discovered, honestly, not too long ago, like just 5 years ago maybe. I've been trading for 10 years full-time, 12 years total. First 2 years I started part-time. And so that's something that I didn't really catch the first few years, and nobody pointed it out until I found, I kind of ran across it. Yeah. So that was just kind of wanted to share with you a lesson on gaps. I hope you enjoyed it, and that's it. I'm going to sign off. It's almost Friday, so happy Friday almost. I'm not sure I'll be recording a video for tomorrow, but I'm sure I'll record a video or two next week. Have a great weekend. If you haven't already stopped by the Black Room, feel free. We're still doing an open house in there, and it's just an incredible community of traders that we're all looking for the same thing more or less, and it's just an incredible community, so supportive, a lot of education, just like I showed you, even when there aren't a lot of calls, because the truth is there are a lot of ideas, but I look to take only the perfect stuff, right? If there's something perfect, then bam, I take advantage. But if there isn't, I try to lay low. So even when there isn't a huge number of calls, there's a lot of good education. Just like I shared with you right now. Well, this is the sort of stuff that I do in the back room on a daily basis. Today's lesson was kind of on gaps in particular. In the back room, we do lessons based on questions, based on what's happening currently in the market. So again, feel free to join us or check us out. We have an open house through the end of the week, so today and tomorrow, and I hope to see you there. All right, guys, take care. Have a nice rest of the day.